All right, great. What we're going to be going over today will be trading the open range. I know the open range can be quite scary, quite fearful, or quite exciting for most all of us based on the expansion and contraction of the markets throughout that open range. Again, most of the volume occurs in the first hour of the day. We make highs and lows about 75% of the time within the first hour of the day. So the most volatile time of the day is the open. So again, there is a method to trading it, and I will begin. Disclaimers: hypothetical simulated performance results of certain inherent limitations, unlike actual performance. Ooh, that went fast. Okay, sorry. Anyway, we already did that disclaimer in the beginning. Why is this going? Hello? Hello? Why is this doing this? Sorry about that, guys. I don't know. It was doing it on its own. So again, who we are: I'm Joe Baker, founder of TradingPub Pro, business entrepreneur, past 22 years, real estate and financial industry, self-taught trader, financial software developer, member of Market Technicians Association, so forth and so on. My partner, David DeBay, has been a professional trader for over 25 years, having held senior management positions at Lehman Brothers, UBS investment banks. David's investment knowledge and experience in the global markets. He does bring a unique approach where he was on the investment side. Okay, sound is rough, huh? Everybody, is the sound rough, or is it just for Chris? It's fine? Okay, so, all right, so Chris, you might want to check your speakers or your internet connection. All right. I'm going to try to get into this because I have quite a bit of slides, and I know that we went a little over on time there. Why this keeps doing this, I don't know, but it does keep jumping ahead on me. I'll try to control that. Open range guidelines. Again, coming into the market, as the market opens, now again, what we're going to be talking about is specifically the S&P futures. They work on Dow futures, NASDAQ futures. You can use them on the AGs, though a little bit differently because the AGs open up at different times. Stocks, they work. This strategy works phenomenal with stocks. Okay, so again, what we're doing, and I want to get everybody kind of into the same thought process, is we're taking time and price. All right, so again, time, price, cause, and effect. This is nothing new. In fact, it's an extremely old method. You know, kind of a Wyckoff method. So again, one of the oldest methods, again, I think that we've kind of lost touch of what truly works in the markets. And again, what I'm trying to do is reintroduce something that is extremely old, but again, it's all price-based. And then what levels do you watch? What does the market need to see? And again, thinking of all the computers, how they trade, all these algorithms. Remember, guys, they're price-based. Right? All these algorithms, all these computers, everything that everybody's feared of, they're all based on price. Now, there's a lot of variables in there, but the one hard and true common denominator is price. That's why this works. This works every day. So we watch the 5-minute high, 5-minute low, 5-minute average. That is your initial balance, first 5 minutes. It's a way of getting a look inside the 5-minute bar. Always know the market edges, prior day's high, low, and close. Those are all considered market edges. So when you get to the edge of the market, it's the prior high. You get to the close, right? That's basically a gap fill, either opening up underneath or above, all right? And then the low is an edge. And everybody watches those. Now here's where it gets interesting. The market's going to push at 936. It's going to run in that direction from 942 to 945. Now, within that 936 push to the 942, 945, on that move, does it make an SOS and an SOW? I will be referring to SOS and SOW. That is sign of strength or sign of weakness. Okay? Sign of strength, sign of weakness. All right? So what you want to do is you want to sell from the 5-minute average with a stop, okay, above or below, based on that sign of strength or sign of weakness. Nothing more than a few ticks. Really, there's no need to defend trades. The market, okay, it will tell you what it wants to do. Okay, don't tell it. It will tell you. It will give you signs of strengths, signs of weakness. Next pivot area will be 955 to 957. The market will make a push higher into what we call in our trading room TZ2. It's our most predictable time of the day. The market will try to push higher during TZ2, and that is into the 10 o'clock time frame. Watch for new high to be made. If no new high, that's a TZ2 failure. Market will try for a new push at 10:08 to 10:12. I laugh at this today because, again, all this stuff worked today. All right. And then the market will move in the same direction until approximately around 10:30. So today we had what we call TZ2 failure, a failure to take out a new high. If you want to check today's market, just because I didn't have a chance to upload the slide and do it just to show you that it does work, I do have some some recent slides in here. I've got some older slides that I've done this presentation before on, but I try to mix up with some new ones. Just look at today's 5-minute average was 15 quarters, 1538, something like that. Never got over it through the entire open range, never got our sign of strength. All those time frames pivoted. They all made their push for the highs, could not actually get over the 14s, and hence did the failure, and you saw the whole rally we had this morning disappear. Okay? First 5 minutes. So within the first 5-minute bar, I'll give you an example. If, say, we come in and we do 1450, and then we've got 1455, your 5-minute average would be what? Right? Split the difference. So it's splitting the difference of whatever the open range is. Again, you'll see it going forward. I got many slides, so I think as I move forward, you'll understand it. Okay, so here's the 5-minute average. Okay, I hope you all can see. If you can't, please expand your screens. Okay, please expand your screen so you can zoom in and see. So you'll see here the market moved from 936 to 945. Pivoted at 945. No, it's just a midpoint. Yeah, exactly. It's just a midpoint. I should have said that. That was probably a much better example. Midpoint, split the difference. So you can do a really quick calculation, or you can get an indicator to do it. All right. So again, we always get a response from the 942 to 945. Now, do we make a new swing high? Okay. Remember, hint, watch your 5-minute average. So we come back up. We pull back slightly. Come into the 955 to 957 zone. What do we do at 955 to 957? We make another push in anticipation for TZ2. That's the 10 o'clock time frame. Up it goes. Do we make a new swing high? We make a new swing high. Does it take out a new swing high between 10:08 and 10:12? Can anybody see it now? Hold on, I don't, if I push on it. Anybody see the cursor? Yes, no? No, okay. All right. Is there guys, is there like a laser pointer here that I can use? Does anybody know of a laser pointer here I can use? Chris, is there, I don't know how to access the laser pointer. here it goes. I got it. Okay. Everybody see it? Okay. All right. Okay, so anyway, here's the third. Okay, here we go. Let's go over this again because I've got quite a few slides and I only get 19 minutes to go over all these. All right. So again, here's your 936, 945 bounce. You come in here, you get your 955, 957. Up it goes. TZ2 time frame, 10 o'clock. You come in, you make a new swing high. Now you watch 10:08 to 10:12 for the new swing high. Okay? If that's the case, then what you do, again, that's a sign of strength. You got over 5-minute average, and then off you go, and then up into 10:30 time frame. Okay, and up here is a market edge, and that's the close of that day, and I believe this day actually rallied back up and continued this rally. So again, this is an example. I've got many, many more to get to. Let's go to the next one. Here's another one, 936. It just keeps doing it. It goes two at once. 936 down to 942 to 945. Market edge right down here. It's also target. Anybody can see that. We actually do have targets off of the open range. So again, we provide the targets. We show the targets. We have targets that are computer generated as to what the movement is going to be and where to take profits. So again, back up. What was that level again? Watch for 5-minute average. Again, that was the hint. All right. So in that original slide, when we said watch for the response during that 9:45 time frame up into TZ2, the one hint is always watch that 5-minute average. You sell against 5-minute average with your stop up above the 5-minute high. Back down again, retest, back up, down. Again, this is just working itself through, and then back up towards 5-minute average again, and then down. So you can see how this market never made it over its 5-minute high. It never closed above the 5-minute average. Here is another one. Okay, here's your move from 936. Here it goes again, doing the same thing. Back up, came back down, 945, back up against. Should have looked at that level. Did we make a SOS? Do we make a sign of strength? You're seeing this market make its move, 955 into the 957s up into 10 o'clock. Is there a new swing high taken out? Have we taken out 5-minute average? No, no, no. TZ2 failure. It's a failure to make a new swing high. No accumulation in the market. Time and price, cause and effect. Back down to around the 10:30 time frame. Okay, again, this happens each and every day. Okay, so here's another one, 936, 942 to 945, comes back up, comes back down, comes into the 955 time frame to 957, back up towards, right, the TZ2 time frame. Up at 5-minute average. Does it take out a new swing high? No. Does it take out the 5-minute high? No. Where do you sell against? 5-minute average. Where is your stop? Above 5-minute high. What time do you need to see this take out? By 10:12. Did it happen? No. Back down again. Okay? It's the 5-minute midpoint, but it's the 5-minute average price. Okay, so the average, so in other words, you're taking, we call it the 5-minute average. You got your 5 high, your 5 low, and your 5 average. It's your midpoint. Okay, so just divide whatever the 5-minute high is, 5-minute low, cut it in half, and there's your line. All right, you guys are going to love this. I'm telling you, you're going to love it. I challenge everyone in this room to go back 189 million days, and you will see. something you don't notice. But the one thing you need to notice is these pivot times. You've got to know the pivot times. Because in the morning, remember, I don't care what your oscillators are saying. Oscillators are almost useless in the morning. Most of what you use is useless in the morning due to the pivots. So in other words, we come down, we come up, we come down, boom, we pivot right back up again. This thing could have had a huge sell signal right here. You get scared, you think it's going to follow through. Next thing you know, you come back up, you jump out because you think it's going to take off. Next thing you know, it comes right back down to you. It comes back up again, right? You've got a failure. This is another TZ2 failure. Look at the time frame. Do you make a new swing high by 10-12? No. Down, right to 1030. Okay, so again, the market will push and pull. It will move itself back and forth, what we call the open range rotation or the field of play. We know where the field of play is. We go over those numbers pre-market every day. All right, so here's another one. It'll probably slip another slide on me here. I've just been doing, there it is, yep. Every one I go, it skips two. All right, so here's another one. Coming in, all right, and again, coming down, 942, 945, coming back up. Here it comes down again. Here's your 955, 957 move, coming back up again. Any new swing highs? No. So the move's back down again. Target was already achieved at this anyway, so most profits were taken. Now you come back into what level? TZ2. Coming back up. Do you make a new swing high? Yes, you do. We take out this level in here. It's what I call the initial sign of strength. Coming back down, up towards 5-minute average again. And that's why it says, what was that level, he said? Because it's that 5-minute average. So if you're ever looking for that one number that you need to know, it's that 5-minute midpoint, okay? You need to look at that number. It is crucial. Then you need to look at the time. Now, why do I look at time? You need to know if the market is doing what it needs to do, but also doing it in a manner where it's being efficient, okay? So what I mean by efficient, this is going to skip forward, so I'm going to wait. There it goes again. If I asked you to go down the street 1.3 miles and it takes you 2 hours, you're not very efficient, are you? You're not showing me a sign of strength. You're not doing what you're supposed to do in the amount of time. So the markets are very much similar to that. In other words, it's time and price, and is the market doing what it should be doing? If a market fails to go up, there's an old saying, if you can't push them up, you push them down. So what I've done is I've gone in, laid it out very effectively, very efficiently, putting in prior day high, low, close as market edges. You put your 5 high, 5 low, midpoint of 5, and it gives you the initial structure. On top of that, you come in, what time are these pivots? Based on the fact that we have a computerized world, I will say again, computerized world, they are using time and price. So if the computers are using time and price, and we all know they're 70 or 80% of the volume today, why trade against them? Try to figure, we're never going to outsmart them, but we can get an idea of what they're going to do and when they're going to do it. Okay? So here again, 936. Remember that 936 bar, guys, because you're gonna really love that one, because again, if you're looking at the market and it's 936, all of a sudden you're going to see that move. It just takes off. It falls, it drops. It's the push-pull bar. Okay, so back up again, back down, 5-minute average, 945. Take it up, take it back down. Here's your move between 955, 957. Target hit. Comes back down. And what happened here? Anybody see what happens here? Failure. Failure to make a new swing high. Look at the time frame. So where does it go? Back down to 5-minute average. Right back down to 5-minute average. Right? It's not snake oil, guys. All right? I'm telling you, this works. Now this one will probably flash another one. So hold on, we'll wait for that. There it goes. All right, so here it is again. All right. Now what I did is I jumped in and I added some recent ones from this week, because I know the questions are, how often does this work? Did it work yesterday? Yes. Did it work the day before? Yes. Did it work the day before? The answer to that question is yes. Did it work today? Okay. 15.38 was the 5-minute midpoint. Did we get above that at any point today? No. You want to know what Apple's was? It was 620. Right? Did Apple get above 620 during those time frames? Did it show a sign of strength? No. 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 Again, guys, this is your initial balance for structure for that most volatile time of the day. Now you see why you get caught on the wrong side and you get liquidated. So again, same thing, comes down, 945, right? You get a little move back up. Any sign of strength? We got 14.1275, 14.1225. No sign of strength, TZ2 failure. Boom, back down. By the way, guys, this is target 1, this is target 2. Target 2 hit. Everybody knows the 7s and 8s are going to bounce from there anyway. Coming into here, market moves down to about 10:30. 10:30, and again, after 10:30, and we do have some other setups that we look for. We do look for a move off 10:30, and then look back up to what? There's those 12s again. 12s happen to be the 5-minute low, 5-minute low, 5-minute low. Okay. Just give this a minute because it's going to skip another. There it goes. Same thing, 936, 942 to 945, comes back up. There's your 12s again, different day, but same price level, 5-minute average. Okay, no takeout, no sign of strength, TZ2 fail, right down into the 10:30 time zone. Okay. And this is going to snap forward again. I'll just snap it back. Okay, this is our last slide. Okay, I know I had to keep it short and sweet, but I can generate 1,000 of these slides because this is something that you will continually see over and over and over again. Here's one that actually went up because the market has been in a downtrend lately. Here's the move, 936. Does it make a sign of strength? Up into the 945. It does. Wow. Finally a sign of strength. What's that level? Buy against. What's this? Wrong slide? Where am I? There's no chart? I'm showing a chart. I'm on the last slide. Okay, how about now? Okay. All right, I don't know what's wrong. You know, again, guys, I can't control. I mean, hit the button to go forward, it goes forward like 2. So I don't know. But okay, but let's go over this again. So 9. Okay. So here we are. 9:36. Okay, up into the 9:45 time frame. We break above. We don't close above, but we do break above the 5-minute high. We come back down to the 5-minute average. Now again, your stop goes underneath the 5-minute low. You buy against the 5-minute midpoint, and you watch for a sign of strength. 9:55. Look at the 9:55 time frame to 9:57. Shoots right up, makes a new swing high or a additional sign of strength. TZ2, moving up into TZ2, target 1, target 2, and right up into this zone, which is your essentially range target 2 with break of 1451.25. Okay, so again, guys, this is the open range rotation. This is the open range strategy. This is something that you all should be looking at. No, there is absolutely, it's funny you say that because this has nothing to do with Fibonacci. I assure you, absolutely nothing. This is all about expansion and contraction, time and price, and who's going to pay you. So now I got 3 minutes left, and I'm going to move forward, but I do want to leave you with something so that you can think about it before you enter a trade. All right? In futures, it's a zero-sum game. There is always the same amount of contracts short as there are long. Most everybody knows that. Most everybody's aware of it. But how does it benefit you? How do you understand it? How do you apply it? You need to know before you enter a trade why you're entering that trade and who's going to pay you. Who's going to need to liquidate and why? So first and foremost, you need to know where those traders are, and that's the whole idea between the 5 high, 5 average, right, and 5 low. And then again, against that level, the market will either push or pull and continue onto that direction. It's around that 10:30 time frame where the market pulls up. Oh, is this the one? Oh, okay. You're right. This is the one that we had a bad link. Okay, let me put it in the room. We've had that one a long time, and I just reused that slide without using the corrected one. Okay, and we have a, again, we have a link right on the website to sign up. I invite everybody in for a free week trial. You can see me do this each and every day. I won't have to fly through it as fast as I have here. I've only got a minute left, so we do want to offer out everybody a free week trial. I put the link in the room. Look at it today. Again, the number today was 1538. Again, with Apple, it was 620.01. You can use it on most anything that trades, that has an open and a close. And again, it shows you structure, time, and price. And again, what it is, it's a reintroduction of what Wyckoff used 70 years ago, 80 years ago. Okay? Again, I got 30 seconds left, and I want to thank you guys for your time. I appreciate it, and I hope to see you all. I'm sure you can take something away.